It's time for Futures in Focus. Tim Mulholland of TJM joining us now from the CME. I guess you guys are still digesting what we got from the Fed yesterday. Tim, we've got bunds trading at 4 bips. We've got treasuries kind of flirting with the 250 line. Is the expectation that yields go lower from here, prices higher, and by what degree?
Yeah, I mean, I think what really the key here is that the Fed realized, they're neutral, but what I think got some took away from this is they may have even moved towards more of a symmetrical policy where they would be just inclined to ease as tight next as conditions would warrant. But I think that the yield curve is what really interests me the most. And I think the next big event we're going to look forward to is how the Fed determines or tells us the mix of their balance sheet holdings, which are currently at 9 years as opposed to 4 years back in 2007, and outstanding Treasury debt 6 years. So as they shorten the maturity, which is what it's expected, I think that could cause the yield curve to steepen. And to me, I think that's more of a play I have. And I just look at 1030s, guy, how it widened from 10 to 40. And I dare say that maybe 2's 10s is going to hold at the 10 basis point level and widen from there. But I think the curve, there's going to be more implications for the curve than absolute direction of rates.
Tim, is WTI sticky north of 60?
I think so. You saw the stocks come down because of refinery demand, and especially with the ITC incident in Texas and even the events flooding on the Mississippi River and so forth. The crack spreads blew out to 20, so demand's there. And with OPEC holding the line, I think it all looks good. May 4th's the next big target date. I think it's May 4th when we're going to see these sanction waivers come due. And, the Saudis didn't seem like they're in any hurry to cut production. They got fooled in November. So fool me once, shame on you. Fool me twice, shame on me, is I think their attitude. So I think things look pretty good and firm, for the next several weeks.